Vladimir, are you a gold bull?
I'm neutral on gold. I think
you run the biggest gold stock
and I think
in the country, and you're neutral on it.
And I think it's good to be neutral if you're running a gold fund. I mean, you don't want to be influenced by short-term fluctuations. For example, what happened last week with gold. I think it's been influenced by lots of factors, bear stearns and everything, and I think that huge volatility is overdone, and I think that, I mean, as David said, we're seeing the pullback. I mean, the dollar is starting to go down back again, and the gold price has started to increase. So I think that this is a good buying opportunity.
Well, I see you created some units this morning.
Yes, we did. I mean, we have been creating over the last week quite a lot. We've had lots of demand from institutions. I mean, at the moment we're sitting at 29 tons of gold. So we are even with the decline in the price of gold and new gold, we are north of 7 billion at the moment. So
is the smart money saying this is the time to buy in?
I think so. Yes, we do see institutional investors coming in and taking their share.
It's quite incredible to think that the new gold, which is an exchange traded fund where you can buy gold directly without having to own free grams, has only been around for 3 years, and yet it's grown 28 times.
Exactly. Yeah, it is incredible. And I mean, when we listed November 2004, we started at about 250 million, and it has been relatively static for almost a year, and then it took off, and it took off strongly. So I think it's probably being at the right time.
Right place at the right time.
Yeah, exactly.
You don't get a 7 billion rand fund through retail investors. What percentage of new gold held by institutions?
It's probably 90-95% are institutions. I mean, obviously we have lots of retail demand, but obviously the big money is with institutions.
Dad, you got any new gold?
No, I haven't. But and it's my fault because I've always focused on gold shares, and I think what it does tell us is that investors prefer to go to gold rather than gold shares, where there's still a lot of problems, a number of issues that our gold miners are facing, and this is by far the safer bet. And I think globally we've seen that as well. I mean, the extent of size of global ETFs are phenomenal, and I think one of the reasons that gold itself has been so firm.
Yes, I agree.
Some of the numbers on ETFs, we'll get into them in a moment, but if we can just give the gold bugs a little bit of hope. There's a relationship between gold and oil that goes back many decades. I just took the last 35 years, and any time that the gold price is below 10 times the price, the gold price rather, is less than 10 times a barrel of oil, seems to have been a buying opportunity.
Yeah, and
we're about 9 at the moment.
Exactly. So yes, I think it is a buying opportunity. I think, as I said before, what happened last week. I don't think it's based on any fundamentals. I think it's purely sentiment, and I think that the gold price will recover. And whether it's going to, how much above 1,000 is going to go, I don't know. But I think where it's now, it's too low.
So let me traded analyst calls gold a play on global liquidity. Would you agree with that description?
I think it's one of the plays. I think gold has many different features. It is in the current situation. It is that. It also has to do with inflation hedging. It is completely inversely correlated with dollar, and we know what is happening with the dollar. And of course, you mentioned the correlation with the oil price. So I think all these factors are kind of conspiring to keep the gold price strong.
Your ETF, your company. It's priced on the JSE, and people don't realize is that 1/10 of an ounce of gold in Rancher.
Yeah, 100 of an ounce.
100
of an ounce. And 100 of an ounce, that's 2 grams, and it's trading at 75 rand at the moment. So gold is quite valuable.
But ETFs generally last year drew in 251 tons of gold. Now, Dave, I don't know how good you are with your arithmetic.
I'm not going to do it on...
I worked it out. It's more gold went into ETFs than South Africa produces.
Exactly.
We're producing 270, I think, or 280 around
240.
240.
Yeah. We're down. We're below China now. So we're in second position at the moment.
Yeah.
But if you work that out as well, it's 60 billion rand worth of investment into gold, 8 million ounces. These are big numbers now that these exchange traded funds are pulling in.
These are big numbers. But one thing you need to take into account, and I mean, everybody's talking about gold, but gold as an asset class is minuscule compared to other assets, compared to FX, to equities, to bonds, to anything else. So what we're talking about is I'll look at it as a small currency, gold. And that, because of that reason, it's very sensitive to demand and supply shocks. And that's why we have seen quite a bit of the price increase over the time, because there is a demand and the strong demand from the ETFs, particularly keeping the floor on the price.
So it's not that liquid, in other words?
No, gold is very liquid. But if you look at the size of the market, it is quite small. And if you have people, for example, pulling from the US equities and wanting to invest in a safe asset, or pulling from a US dollar wanting to put in a safe asset and going into gold, that amount of money that they might put into it is quite significant. That
view on diversification, that you should have a little bit of your portfolio in gold, seems to be gathering momentum now, and people talking even globally at 5% or so.
I think so. I mean, we've done a research with the World Gold Council on the diversification specifically for South African investors, and it's consistent that investors should keep between 5 and 10% of their assets in gold to optimize their...
Where is it globally?
I think it's more or less on the same level. I think it was 5%.
But what I mean is, you said that it's a small market.
Oh, no, it's completely negligible. I mean, if you look at the size held in gold is probably less than 100th of a percent. It is very, very small compared to the other assets.
So if investors around the world, David Shapiro, were to take that 5% and put it into gold, then $1,000 certainly won't be where to start.
No, exactly. I think it would double. I think the question I wanted to ask Vladimir, what is the central bank holding now, just on a relative basis?
You mean the South African central bank?
No, global central banks. Have you...
I don't have that number, but they have been. I mean, as you know, they have the agreement by which they can sell certain quantity per every quarter and so on. What is interesting is they have been selling less than they're allowed to. So it seems that even the central banks want to keep.
That's bad news. Because remember when the Brits started selling, that was a time that the gold price started rising. So the central bankers don't exactly get gold right.
But also, as their economies expand and they don't increase it, the gold as a percentage of their overall...
Yeah, but I mean, what I'm trying to say is...
a good sign.
Exactly.
There's less pressure to
Exactly. But what I'm trying to say is they're selling less than they can. So actually they believe in gold.